Altria Group Inc. just restated its financial figures. The original numbers were wrong. Altria Group Inc. just did something that punters rarely notice. Filed an amendment, corrected the record, changed the story after it was already told. The filing sits in the SEC database, quiet, unremarked. But restatements are forensic gold. They reveal what management got wrong the first time, or what they chose not to disclose. What exactly did Altria get wrong? And why should you care about a tobacco giant rewriting its own history? Right, what's the damage? Altria restated its figures without disclosing the specific magnitude of changes. If the corrections involve material revenue recognition errors, institutional investors face potential portfolio rebalancing decisions. Pension funds who assumed stable tobacco cash flows will confront unexpected volatility when quarterly reports surface. Your financial statements, quietly lifted from your filing cabinet while you slept. The pickpocket worked clean. No drama, no headlines. Just different numbers where the old ones used to be. Remember that number. Follow the money. When a company with $8 billion in net income needs to correct its own math, the forensic accountant pays attention. The market cap sits at $116 billion. If this valuation relies on the original incorrect figures, shareholders face potential repricing across all tobacco sector holdings. The trailing price-to-earnings ratio holds at 14.5 times. Operating margins clock in at 3.36%, exceptional for any business, let alone tobacco. But those margins depend on the accuracy of the underlying figures, and Altria just admitted the underlying figures were wrong. The evidence mounts. Put simply, someone made an error significant enough to require federal correction. The company generates $8.5 billion in free cash flow. If cash flow calculations contain systematic errors, credit rating agencies face pressure to reassess Altria's debt capacity. $24.6 billion in total debt sits on the books, but debt-to-equity ratios remain undisclosed in the verified data. Bondholders who relied on the original debt metrics will encounter revised covenant calculations when the corrected ratios emerge. The gears that should mesh smoothly now grind against each other, metal on metal. Something in the machinery doesn't fit. The amendment filing provides limited detail on what changed, limited explanation, limited context. Just the legal requirement to file corrected numbers. Translated, Altria's financial engine needed repairs, but they won't tell you which parts broke. The maths don't lie. The options market tells a different story. Volume to open interest ratio hits 3.4 times normal levels. Traders are positioning hard. The put-call ratio sits at 0.22, meaning calls outnumber puts 5-1. Bullish positioning dominates. But the volume surge suggests something underneath the surface, something that makes professional traders move size. The dominant strike sits at 32.50, expiry in 17 days. Someone expects movement. Soon. If options traders possess advanced knowledge of the restatement scope, retail investors face information asymmetry in derivatives markets. If you want forensic breakdowns on consumer defensive stocks every week, subscribe. The macro environment amplifies the uncertainty. 10-year Treasury yields hold at 4.45%. The VIX trades at 15.32. Low volatility, calm markets. But amendments create their own volatility, not the kind that shows up in indices, the kind that shows up in courtrooms, in regulatory investigations, in shareholder lawsuits asking why the numbers were wrong the first time. The analyst price target sits at 70.36. Current price trades at 69.58. The market price is in modest upside, but the market doesn't know what the restatement contains. If analyst models use the incorrect baseline data, price targets face systematic revision across all tobacco coverage. Your lungs filling with water while the surface recedes above you, each breath harder than the last. The amendment filing provides no oxygen, limited clarity, just the knowledge that something below needs fixing. That means Altria's credibility now carries a forensic asterisk. The weight of unanswered questions pulls everything toward Earth. Orbital decay has begun. Nothing holds the story in place when the numbers themselves become questionable. The company's 5.3% revenue growth looks solid on paper, But which paper? The original filing or the corrected version? The operating margins appear exceptional, but exceptional based on what calculation? The free cash flow generation seems robust, but robust according to which accounting treatment? Auditors who signed off on the original figures will confront professional liability questions when the correction details surface. No escape hatch. The forensic trail reveals additional concerns. Altria operates in a heavily regulated industry where accuracy matters more than speed. The FDA monitors every aspect of tobacco operations. State attorneys general scrutinize financial disclosures for settlement compliance. When restatements occur in this environment, regulatory attention intensifies. The filing provides an unspecified timeline for when the errors were discovered, limited indication of whether internal controls failed, limited assessment of whether similar errors exist in prior periods. These gaps create forensic red flags that extend beyond simple accounting mistakes. The smartest guy in the pub will tell you amendments are routine paperwork mistakes. Revenue growth and operating margins look solid on the corrected figures. Ha! Routine paperwork doesn't require federal filing corrections. Routine paperwork doesn't trigger volume surges in the options market. When a $116 billion company admits its published numbers were wrong, forensic skeptics ask, what else might be wrong? What other calculations need correction? What other disclosures remain incomplete? The filing contains limited discussion of management's assessment of internal control deficiencies. The data shows an unspecified timeline for remediation efforts. Evidence suggests the correction process remains incomplete. Altria's restated figures represent a rewritten crime scene after the photos were taken. Subscribe for forensic analysis that cuts through the corporate guff. This is a forensic risk signal, not a trading recommendation. Altria Group Inc.'s Skeptic Score, 7 out of 10. Amendment with limited disclosure raises credibility questions. The tobacco industry operates under intense regulatory scrutiny. Every filing matters. Every number gets examined. When those numbers require correction, the examination intensifies. Altria generates massive cash flows from a declining industry. The business model depends on pricing power and cost management. Both require accurate financial reporting. Both require investor trust. Restatements erode that trust. They create doubt about management's attention to detail, about internal controls, about the reliability of future guidance. If internal control weaknesses contributed to the restatement, external auditors face increased scrutiny from the Public Company Accounting Oversight Board. The timing raises additional questions. Altria filed the amendment during a period of relative market stability. No external pressure forced the correction. No regulatory investigation demanded revised figures. The company chose this moment to admit the original numbers were wrong. This voluntary timing suggests either newly discovered errors or previously known issues that finally required disclosure. Neither explanation inspires confidence in management's oversight capabilities. The forensic examination continues beyond the immediate restatement. Altria's amendment creates a precedent for questioning other tobacco company filings. If one major player admits calculation errors, industry-wide scrutiny increases. Competitors face pressure to review their own figures. Investors demand additional verification of tobacco sector financial statements. The restatement effect spreads beyond Altria's individual credibility to the entire industry's reporting reliability. Subscribe for weekly forensic analysis of companies that rewrite their own stories. The channel focuses on what management doesn't want you to notice. The numbers that don't add up. The filings that raise more questions than they answer. No predictions, no trading advice, just forensic examination of the evidence. The evidence speaks for itself when you know how to read it. Altria just provided new evidence. The market will decide what it means. Stay skeptical.